Hey guys, David Robinson here. Welcome to the apartment investing journey. Really excited about our guest today. It's not always that we have two guests at the same time, but we've got double the value coming your way because we've got Chris and Ashton Levarek with us today. Appreciate you guys coming on and spending some time with us, and really excited about getting into our conversation today.
Absolutely. Thank you for having us, David. I appreciate it. It's always an honor to be on these kind of talks to get to tell our story. So definitely appreciate
Yeah.
it. Thank you.
So I got Chris's bio, but I'm just going to sort of let you guys introduce yourselves so that our listeners can get a sense for who you are and some of your background. So maybe Ashton, why don't we start with you and just give us a little bit of description of your background and your role with Valkyrie Investment Group.
Yeah. So my name is Ashton Levarek. 21 years in the military, retired May of last year. Um, I did the whole pararescue jumper for the Air Force, special operations stuff. But as I was getting close to retirement, my brother was kind of coming to, and he kind of got this idea about investing in real estate rather than investing in the stock market. And that kind of made sense to me. Instead of going out and get another job, why don't we try creating passive income, creating that residual income that, everybody talks about, and, wealthy people, successful people all talk about seven streams of income. Like, why don't we do that? So we started looking at real estate, started buying. Me and Chris, or Christopher and I, both partnered back in, so that would have been 2018, fall of 2018, bought our first property. And we were off to the races, learning and just buying everything we could that made sense, and even some that probably didn't, or making offers on a lot that didn't make sense. But it's been a fun ride. So, and now we're syndicating some larger apartment complexes.
Love it. Love it. And Chris, what about you?
Yep. So he kind of did the end. I'll start at the beginning. I
Mhm.
did. I traveled after high school. I went to France, lived in France for a little bit. I did a degree over there, a business degree. So I do speak French. Then I decided to follow my brother. I went 4 years Air Force. After that, I joined the IT sector, moved to Phoenix. An ASU grad. And yeah, then 2018 came around and we decided jointly that we wanted to go into real estate. We started buying remotely. Nothing we own is actually local to us, which is kind of interesting. We buy in other states. Even the first deal was in North Carolina, and it wasn't really local to us necessarily. So, yeah, from there we just scaled up. Every deal we've done is with a partner, and we knew we could grow fastest with partnerships. So that's where we focused, and it's led into syndication. It's been a really fun ride.
Love it. Love it. Well, thanks for the brief introductions. And our business or our podcast is all about the journey. So we want to just sort of break down this process that you guys have been on. And maybe we can start where, you guys came together in roughly 2018. How did that happen? I mean, Ashton, you mentioned that, Chris hit you up and said, hey, we should really think about getting into this space. But what were some of the nuts and bolts behind you guys really formulating this concept, business plan, and strategy to move forward with real estate investing?
I would say for me, it actually started a lot. So it started back in 2016. I ran into a guy. We were out in the Afghanistan, getting ready for a mission we were doing. We were sitting under the helicopter, and there was this young medic. He was talking about all this cash flow he was bringing in off of all his properties, and I thought that sounds crazy. And so I started picking his brain, and over the rest of the deployment, I kind of just started writing down everything he said. So there was that marinating time. I didn't do anything with it from 2016 up to 2018. And so when Chris came to me and said, hey, I'm on this, checking out this bigger pockets thing. I've been reading these books talking about this Burr method, and which is basically a syndication, but a lot shorter, a lot faster. It just made sense. I was like, yeah, I actually have heard all about this. Let's do it. So that's where it started. That's where the conversation started. And, Chris had done a ton of research within the past, like the 6 months or 4 or 6 months leading up to that point, to when he told me about it. And, I was ready to jump on board, and we kind of we made a 90-day sprint, a 90-day goal. Let's get something under contract in 90 days, which I highly recommend making those kind of short-term and long-term goals when you're trying to develop something like this. Break down your large goal into short sprints, and then hit those sprints over the next 90 days, and it'll lead you to where you want to go. obviously just don't make blind sprints, but so that's kind of how it started. That is how it started. Chris and I didn't know we were going to develop a whole business off of it, but we did know we want to be partners. And we've been close brothers since we were young. So it kind of just made sense. We trusted each other. We've learned a lot. I think we're closer now than we've ever been because of it. You know, we hold weekly, bi-weekly, sometimes even 3 times a week meetings. And so I don't know. I'm probably broad stroking a lot of stuff.
No, that's great.
Yeah.
Well, and a couple follow-up questions to that. Just for clarity, you were in Oregon, correct?
I was in North
And
Carolina at the time.
you were in North Carolina at the time. Okay.
Yeah.
And Chris, where were you at this time? 2017, 2018.
I was in Phoenix, Arizona. Yeah.
Okay. Okay. So you guys are in completely different markets, hundreds of miles away from each other. And you're saying, all right, we've got this same vision. How are we going to attack this? What was the first step? You mentioned, hey, we've got this 90-day goal. We want to get something under contract in 90 days. What were the steps that you guys took to get this headed in the right direction?
I can tell you the wrong steps, but I would.
Okay, let's do that. Let's start with the wrong, and then we'll talk about the right steps.
Oh, so the wrong step would probably just go out and start making offers, right? Chris did the right research on this one, and I'll let him talk about it. But I think I'll tell the wrong steps. The wrong steps would be going out. Yeah, I want to invest in real estate and just start making offers on everything that's for sale, without a team in the place, without research of the market, without understanding how to secure a mortgage, how to run the property once it's closed, how to analyze the property if it's going to be a good investment. So Chris, I think he started right, and I'll let him take, but he started looking at markets first, and that's where you need to start.
Love it. Well, Chris, shed some light.
Yeah, I mean, it depends on your goals. Active investing isn't always for everyone. It sometimes can benefit to partner and get more experience from as a passive investor from some other partner who has experience in the market, in the area, and in the asset type. We just decided to go all in actively and kind of pick up partners along the way. But you start with the market. So you're looking, in certain market criteria that says this market's a good market. Phoenix actually was a great market in 2018. Still is. I looked at a bunch of deals here and they just weren't qualifying for what we could afford by ourselves. And we were only thinking like that first investor where you're like, I have to do everything myself. I have to find all the capital. But when you think like that, you're going to be out of a market. You're going to be pushed out,
And just to help our listeners understand, what was it that you guys were looking for at this point in time? Like what, that 90-day goal of getting something under contract, what was it that you were hoping to get under contract, at least for this first deal?
We were looking for a duplex. We knew we liked multifamily. Single family wasn't very interesting for us. We knew we could scale with multifamily faster than we could with just buying single family. Not just because of loan type, but also there's a lot more areas with single family where if it's not rented, you're not making money. Multifamily, if one unit's not rented, maybe the other units are balancing that off, so you're not losing money every month. So we knew that idea. So we focused on duplex. We liked the idea of the Burr method. I was listening to Bigger Pockets a lot back then. So it's a great podcast if your listeners haven't heard of it. And just a ton of information on the Burr method on there. But it's basically when you are able to buy a property, you fix it up, and you're going to go refinance it and pull a lot of the equity that you put into it out. So say you put 20K in, you're refinancing, you're able to put that 20K out with the new valuation. And that just lets you scale a lot quicker. And we like that idea. So that's where we focused. And a duplex was a good starting point.
And you were struggling to find the right opportunity in your own backyard, but you had done quite a bit of market research and analyzing other markets. Where was the first deal that you guys ended up finding?
It was Durham, North Carolina.
So talk to us a little bit about that process then. Maybe there's a good, let's just have a quick discussion about that first deal, how you found it, how you acquired it, and some of the details there.
Yeah. So so once you decide on a market, you need to start putting your team together, right? Maybe you decide on 3 or 4 markets, but try to narrow it down to maybe your top 3 and then start making contacts, building relationships in that market. And that's where we kind of went wrong at the beginning, but we made up for it with other relationships. So initially we went with a real estate agent that had no real estate investing experience. And therefore, they're bringing deals to you that are based off of what not an investor would want. Hey, it's got a great kitchen. Here's the view. What do you think of the view?
Right.
That's not, that's not a value add process for you. You want something where you can add value. And so when we started saying, hey, but we started showing her deals, she was like, well, it's kind of a dump, stuff like that. So that's where that slowed our process at the beginning, but we learned a lot from that. And then so I think initially you want to find a good realtor, somebody to bring you deals, a deal finder. Then you're going to need a good property management. And I'll tell you, the property management company or person or whoever it is, they can add a ton of value to your growth, to your success, just because of their experience in that market alone. So, because you're going to bounce off rental, what the potential rents are, what it needs to get to those market rents, what you need to do to incorporate new management, to lease up, to all that stuff. Like, they're going to manage your property for you. And if you're new to this area, I definitely do not recommend doing it on your own, but the property manager is a huge piece to it. But then, of course, there's your contractors, your handyman, and the last one, of course, your mortgage broker. So those are kind of like the top 4 people in your team initially. When you do a syndication, it gets even bigger, but it's really those areas that you're focused on.
And what were some of the strategies that you deployed to build that team early on? Here you are, looking at deals in a completely different market, hundreds of miles away. How did you go about actually finding the people that you ended up working with on this first deal?
Technology. Yeah.
I think we leveraged Bigger Pockets a lot, but you could leverage multiple forums. You could, be looking within your network, in LinkedIn, within Facebook, whatever it is. You could search for a lot of this stuff now, which is a lot easier. But for Bigger Pockets, there's a lot of people on there with a lot of different backgrounds and experiences and roles. And you could just search in there, property manager, Raleigh, whatever. Or you could even put a post on there looking for property manager, Raleigh. And that's how we found a lot of our people starting out.
Yeah, love it. Okay. So you found this duplex, you started to build your team, get the pieces in place. What were the next steps?
It was a capital piece. So we started making offers, but we had, for a lot of it, you need that initial piece of capital. So how do you partner with somebody? How do you figure that whole piece out? So we looked into joint ventures. We looked into private investors. I think the first one, Chris, it was a joint venture, right?
Yeah, it was 70-30. So the investor brought 70%. We brought 30% plus renovations, cash purchase.
And that was, okay, so cash purchase, 70% of the total equity needed and 30% of the total equity needed?
Correct. For the purchase only. So we did all the renovations on our own.
Oh, budget. Gotcha.
Yeah.
Okay. And then how was the ownership split on the deal?
It wasn't. It was a private note.
Mm-hmm.
So we did.
It was
private
debt.
note. Yep, debt with deed of trust.
Okay.
So they had collateral for the property. If we defaulted, they could take the property.
Love it. Like that better than a partnership. So really not even a joint venture. You just found a private lender.
Yes.
I mean, at the beginning, and this is a good point too, if you lack the credibility and you want to develop that partnership, I got on the phone with an attorney and the private lender, and we actually created a joint venture. We created the deed of trust and the promissory note. So I got 3 legal documents backed by an attorney. It gives you credibility. It's a good way to start. Do you need all those documents? No, but sometimes it helps to have them for credibility.
Yeah, love it. Okay. And what was the business plan with this duplex?
Yeah, we were looking to do the BRRRR strategy. So we wanted to buy it all cash, renovate it, refinance it, lease it up, and then either sell it or hold it. In our case, we were able to pay off the private lender after about 6 months and have all our equity out. So it was a good deal.
Cool. And so, I appreciate you going into a little bit of detail. We want to push the conversation forward because you guys are doing some exciting stuff now. But it's great to sort of set the stage of how someone breaks into the industry, right? No experience outside of, being on podcasts and listening to reading blogs and just trying to soak up as much information as you can. it's a lot different than just listening and reading versus taking those actionable steps, which you guys did. Set the goal, 90-day goal of getting your first deal under contract, started reaching out, building your team, ultimately found the deal, structured the deal, put it all together, and you got your first deal under contract and a successful burr. It sounds like. So that springboarded you guys forward. There's a lot in the middle, but I'm interested in hearing first about where you guys are at today and what you're focused on. So what does your business, what does Valkyrie Investment Group look like today?
So that was 2018. We went on to do several other duplexes, a 5-unit, 13-unit, 16-unit, and then we did an 84, 120, 384. And we were, and this is news as of this morning, but we were doing an 89 unit, but I think that is not going to work out for other reasons. So some stuff fell through and that was not going to work, but that's where we're at today. So the last deal we did was a 384 unit in Daytona, Florida, or we also do luxury Airbnbs as well. But yeah, so that's where we're at right now. Yeah.
And so what are you guys focused on moving forward? What markets, what product type, what do you guys look for?
Well, we like the Southeast. We love Florida. I mean, Florida's great. You look at the demographics where people are moving, and I kind of I want to back up a little bit to something you said. I think when people get started, people make the mistake of thinking they want to work in the business. So they start looking at everything. But if you would take the idea that I want to be the owner of the business, I want to be the owner of it, then you end up putting the right people in place. So that's a mindset thing. Then the other thing for the markets was we look for, I mean, it's really some basic stuff, but it's job growth, which drives population growth, which drives rent growth and unemployment. Look at those demographics. Where are those people moving? Where are people moving for jobs right now? Florida's huge. I mean, the Southeast is huge. Where are they moving out of? Don't invest in California. Don't invest in Oregon, or New York or, the Northeast. Like, I'm sorry, but that's just the facts. The businesses are moving to the Southeast. And so that's going to drive everything else, drive the economy. Idaho is huge right now for some reason. A lot of California moving up to Idaho. The market's on fire up there. I mean, this isn't my area. We just look at the data. That's all.
Yeah. And so if you guys could describe your roles in your business in Valkyrie, what do those roles consist of?
Yeah, that's a big part of our business is defining the roles, who plays what role, who's accountable. So I'm actually, I guess you'd call it the operations manager. So I keep the business humming along, everything to do with tech, everything to do with managing people, departments, accountability, processes, systems, that kind of stuff. Ashton is more the visionary. He's more big ideas, big thinking, brand, market awareness, investors, talking with partners, that kind of thing. He also runs a podcast that we're getting close to putting out, starting our own. But besides that, I mean, we have multiple people on our team. Those are our roles specifically. We have about 7 people on the team that play other roles as well, including our wives. So that's interesting.
Oh, that's great. Yeah. And so who's really focused on deal sourcing on your team? Do you have a dedicated team member? Are the both of you sourcing deals and networking with brokers? What does that look like for you guys?
Yeah, that's a great question. So, we were doing that at the beginning, but we found, and we say this over and over, what do you want to do? What do you want to do in this business, right? And so for us, we like building relationships and we like sustaining those relationships and helping people place capital in deals. We like that side of it. So we've partnered with another group, which I'm happy to drop their name, and they'd love to come and talk as well. But they do a lot of the deal sourcing, they do the underwriting, and we've done to date 3 or 4 deals with them, all successful so far. There's highs and lows, but never low enough to make it a bad deal. So we really enjoy it. And this really goes back to like, build your team. Your team's really important. What do you want to do? You want to be doing all that stuff? You can only get good at one thing. Otherwise you're split between, all the different things that go into a syndication. So we really focus on the investor relationship right now, on building on the education piece, on building out that relationship, on helping people or partnering with the right people to make sure the business or the business plan is executed properly. So actually our partners are doing the deal sourcing and underwriting right now.
Yeah, I love that. And so, a couple follow-up questions to that, type of business model, with you guys really, emphasizing, obviously there's different roles that you play in the deal from, underwriting to ongoing asset management to business plan advisory, whatever your roles are in that. But you guys have an emphasis on bringing equity to the table and bringing your investor network to the table. You mentioned that you guys have done a bunch of deals, right? I mean, 2018 to, here we are 3 years, and you guys have cranked out, it sounded like 8 to, 10 deals already.
Mm-hmm.
How did you go about building that relationship? You mentioned one partnership with one group that you've done 3 deals with. Have you co-GP'd all those other deals as well? And just give us some context about how someone who wants to get in this space but feels like it's overwhelming to take on every aspect of taking down a large commercial multifamily deal. And that was a horrible question, but I just want to hear a little bit more about, like, man, you guys have knocked out a bunch in 3 years, right? How do you do that? There you go. That's my question. How do you do that?
Yeah, the partnerships is probably the biggest thing we always stress. And you'll hear that. I think people, when they get started in syndication, they typically start with raising capital because the sourcing of the deals is tough because asset management experience isn't there. And Ashton mentioned it, focus on what you want to do and then provide that to a team. So there's always room to raise capital on syndications. However, if you are a rock star asset management group and you want to grow your business in that direction, then go ahead and do that. We were managing 46 units on our own, small multifamily. So we had asset management experience. However, we found that by partnering up, we partnered with a group that has 40 years experience, 1 billion in assets and asset management. And what that means to our investors is, hey, we're not risking your capital at the expense of our us learning and our ego. We don't want to, we want to be good at everything. That's the question you need to ask. Where do you want to focus? And then go provide that role to a team somewhere. So if you want to be good at sourcing deals, if you want to have those broker relationships, if you want to do the underwriting, the analysis, you can do those things. You just have to get the strength and then apply it where you find a weakness in a team. So typically in syndications, there's always room for capital raisers. That's where we found a lot of interest, but we also like that part too, talking with a bunch of people, educating people on this investment type. It's a fun process. So, and then just talk about it. You asked, how do you do it? You just talk about it. We ran into our partner while we were doing a 16 unit syndication that we were sponsor. The lead sponsor was one other GP on that one. It's a small deal. And we just happened to run into this partner at a networking event, or we knew a guy who knew him, and we bounced the 16 unit off him, and he said, this won't work, and don't do, at the beginning it was kind of funny, and we ended up doing it, and we ended up crushing it anyway. And that kind of talking about what we're doing led to a bigger partnership. He's like, these guys can actually do some stuff, so we got involved on bigger projects.
I love that. And so you found a group that you've aligned with. You've done 3 deals with them, and it sounds like, is it fair to say that you're focused on working exclusively with that group, or are you guys still working with other co-GP opportunities?
We're open to working with anybody that makes sense, right? So we want to make sure that our morals, our values are aligned with the people we work with, and we're all headed in the right direction, right? I mean, at the end of the day, yes, everybody's trying to make money, but we want somebody's skill set that complements ours, that their lifestyle is similar to ours. Like, we're all aligned in the same direction, right? Go fast alone or go far together. And we're trying to go far. We're trying to go really far. So we want people that are in the same path as us, right? We've worked with people before on one deal and then they go off and do something else. And honestly, that's a lot tougher because you're developing that relationship, you come together, and then, it's typically for these deals, it's a 5-year deal. You're in bed with them for the next 5 years, for lack of a better term, right? So you really want to make sure your goals, your vision, your morals, values, all that stuff's aligned, and that they complement, what you're doing. And I think for those people that are starting out, I think a great place to start is the book Traction and the DISC profile. And because it helps you outline what you need in your business, that way you can figure out what you're good at, what you want to do, and what you're good at. And we talk about this a lot, because I think a lot of people they think they have to do this. Oh, I have to go start a podcast, or, oh, I have to know how to underwrite these deals, or, oh, I have to know how, because that's what all the books say. Oh yeah, you got to raise capital. Well, you just have to know what you're good at, what you're strong at, what your personality complements, and then find somebody else, work with other people, and be good at your one thing. Be good at your one thing, and the other people will come to you. I mean, we weren't out looking for partners. We just were talking about what we were doing. We were meeting other people and talking about what we were doing, and not to pat ourselves on the back at all. That's just all we were doing. We realized what we were good at, talking to people and educating other people in our network. And that, he had the deal flow and he needed some capital for it. So it made sense.
Yeah. Love it. Yeah. Thanks for that description. And do you guys see yourselves eventually sourcing your own deals, underwriting your own deals? Do you see that as the path of progress for your company? Or do you see yourself staying in your lane and being a part of multiple, other opportunities and playing your role in those opportunities?
I think the future of Valkyrie Investment Group, yes, absolutely. We see ourselves doing that. But by saying ourselves, it's not something that Chris or I would do. We would bring somebody on the team to do that. Right. Because again, understand your weaknesses, understand where you're strong at, understand what you're good at. I think I've just finished a book by Eckhart Tolle, and it was a brilliant book, but there's something he said in there. He's like, if you're not doing it with enthusiasm, if you're not inspired to do it, you're actually going against the grain of your very nature. So do not ask me to underwrite a deal, because I will not do it.
I love that.
To be honest, I wasn't too bad at it. So.
Nobody said anybody was bad.
I can see the dynamic between the two of you, and I have a feeling that Chris is the one that probably knows his way around a spreadsheet or two. So.
Exactly.
Well, Chris, anything else you would add as far as the future of Valkyrie and sort of your methodology about growing your business?
Yeah, definitely. I mean, I like the alignment of where we are now, where we're getting better at this one thing that we're doing, which is raising money. It's educating. We just did a short-term rental as a proof of concept. It was in Florida, Kissimmee, Florida, right next to Disney World. Raised capital for that, all with private notes. And super cool that we could do that. But it was because we built the foundation, the infrastructure around raising capital. So we had the list, we had the relationships already. We raised, $300,000 in like 2 days. It was really fast, and we could close on this 7-bedroom, nice luxury short-term rental. So I see us staying true to that core. And if we go outside that, we will bring on team members who are strong in the areas that we need to focus on. Might we one day expand into having our own property management group like many syndication groups do? Yes, but we'd need another group of 2 to 3 people to manage that directly. That's not because me and Ashton are lazy. It's because if we stop focusing on the areas that we're doing, pieces of that business will crumble, and you won't have that structure anymore. So I like having that core of knowing what you're doing, knowing what you're good at a company. Will we grow outside of that? Will we expand? Yes, but we'll always expand with people who strengthen the business. So,
well, I appreciate that, Chris, and I do want to spend some time on a particular deal, and you guys, I think we're prepared to talk about this 13-unit deal in Fayetteville. But before we dive into that, because your strength is on the capital raising side of things, talk to us about how you've built up your investor network and any advice that you would have for some of our listeners who are trying to start to build up a network where they can bring capital into their deals.
Yeah, that's a great question, because that is something that's ever evolving. Because initially, when you're trying to raise capital, you should be anyway, reaching out to people in your immediate circle. So family, then friends, maybe coworkers, and you write all those people down, right? Write all those people down, and then start in that immediate circle, that family, then the friends, then the colleagues, then friends of friends. And with social media these days, it can grow really fast and you can really start talking to people fast. But at the end of the day, people don't invest in you until they know, like, and trust you. We all go buy toothpaste, and you go to the toothpaste and you pick out the toothpaste, like, and trust. And a lot of times you only trust them because they've been around for a long time. They could be selling you crap, who knows? But the reality is, like, you do have to build that trust. You have to build that recognition. And so a lot of that's done by talking about what you're doing. So building those circles, building those lists of people to reach out to raise capital. Then once you've done that, once you've exhausted that, I mean, I hope all your listeners have billion-dollar friends that can reinvest in all your deals, but that's not the case a lot of times. So what you have to do is start building out your network even further. And so that's where it gets into using social media to grow your platform, to grow your brand. And I'm here to tell you, if you've been posting about cats and, how bad the president is, that's your brand right now. So, you may need to change your brand. You may need to change what the public sees before they start investing in you. So social media is really powerful. SEO is very powerful. Chris has become a whiz at SEO for our business and brought in a lot of investors. But the reality is, when somebody Googles what is a good one, Chris? What's a popular one? How to invest 25,000?
Right.
Yeah. How to invest 25,000. We show up on the top page, on the top 10 list right there because of SEO. But the problem with that is they still don't know you. So there's a whole education piece after that. This is what we've done. This is who we are. These are our values, like that kind of thing. So there is a whole process to it. So that goes into, once they get on your list, once they sign up for your investor club, they're going to get educational emails. They're going to get phone call. Like, we want to get on a phone call with them. We want to talk to them. We want to learn who they are and what their goals are, that kind of thing. So there is a whole process. That's why I say start small, start with your immediate circle, friends and family. But after that, you will have to grow it out, and you will have to grow that process. And there's a lot of coaching programs that teach you how to do that. I don't know, Chris, anything else we should talk about?
Well, I was going to ask a follow-up question. You already gave sort of one tip, but if there was one strategy, Chris, that you could encourage our listeners to implement that's worked for you guys in building an investor list outside of their personal friends and family, what would that strategy be that you would encourage someone to pursue?
Definitely. And I wrote a blog on this, 5 simple steps,
cool.
But I could share that after. But yeah, it's in step 1, know your audience. Step 2, build your platform. So how are you going to reach them? What's your brand? So like Ashton said, what do people want to see when they come to your platform? And then you're going to create that funnel. The funnel is probably the most important part to building your list. So when someone comes to you, when you have that first call, when you have that first email, whatever, where is it going? Where's the relationship going? And is it smooth? Is it automated? If you can automate it, that's much easier. You can do it at a bigger scale. Automated just means they enter a funnel. This thing happens, then this thing happens. This emails get sent, that kind of thing. And the 5th step is really developing the relationship. So the personal touch, the calls, continuing that funnel past, taking them from a cold to a warm to a hot lead. That takes time. Sometimes we've had people, we met them for the first time 2 years ago, and all of a sudden 2 years later they're investing. So it can take a while, but yeah. So avatar, build your brand, build your platform, have your funnel, and develop that relationship. Just 5 steps. They're huge, but
and would love to get a copy of the blog post, and we'll try to link to that in the show notes here, so our listeners can go and check that out. Well, let's transition the conversation slightly in the time that we have remaining. Let's talk about a particular deal. You guys mentioned this 13-unit that you purchased for roughly $500,000 in Fayetteville. Maybe if you can, just describe the asset for us and how you ended up sourcing the deal originally.
So I was actually stationed in Fort Bragg, which is right next to Fayetteville at the time. And a friend of ours brought the deal to us. Somebody I met in a networking group, which, back when you could go to physical networking groups, although a lot of states are opening up now. But anyway, he brought that deal to us. It was 13 units. They were all one bedroom, one bath, I think, except for two of them. And it was a 5 unit, then I don't remember, five, and then three or something like that. And it was around a pond, and it was in a decent part of Fayetteville, which is, mind you, when you look at markets, it's a high cash flow market. They have a strong renter base there because of the military. Not so much appreciation wise, but renter base. And at the price we got it at, we knew we could increase the value by increasing the rents and decreasing expenses. And so that was the focus. Chris, do you remember the total price and then all in rehab costs for that one?
Yep. Yeah. So total price was 499,000. So cost per unit is pretty cheap. But then we actually partnered with another investor on that. They brought 180,000 for down payment and renovations. We ended up putting another 25,000 into it for renovations. So around 105,000 total renovations, and the rest was the down payment.
Okay. And how did you structure it with that partner? Was that like a joint venture structure?
Yep. Easiest 50-50. Easiest syndication joint venture you'll ever do.
Okay. Great. And what kind of debt were you able to get on that deal?
It was commercial. It was with a local bank. I think I can't remember what the bank name was, but commercial 5-year term. I want to say the interest was somewhere around 4 to 5%. So it was, it was a commercial loan. Those are typical what you're going to see amortized over 25 years.
Okay, great. And so you knew this was a value add deal, right? What exactly were you planning on doing once you took over the asset?
So there was a lot of deferred maintenance. There's a lot of overgrowth of vegetation. I think a couple AC units need to be replaced. And then, of course, remodeling, repainting, cleaning the insides. I mean, some of the management, whoever had been managing the property, whether it was I think it was self-managed, actually, he had kind of let it go. And even though people may have been paying rent, there were some hoarders in there. It was just really, it was really hurting the property. So first order of business was cleaning up the exterior. Then as leases expired, implementing some type of waterfall / rehab. So rehabbing as we go and shifting people to other units. Some people weren't up for that. So unfortunately, they weren't up for the new rents and the new amenities, or the nicer amenities, I should say. And so, they left naturally, and that's kind of the process, how it goes. Right. So we cleaned it up, repainted, did a bunch of those, and raised rents as we went. I'm happy to say we were able to hit our projections in 2 years rather than 5 years. So,
no, that's great.
Yeah.
And so did you turn all 13 of the units in that 2-year period?
No.
Yeah, I think there's a couple left, actually,
about 5 left too.
Yeah, which is good because that means there's meat on the bone for the next investor.
And was that part of the strategy on the exit? Was, hey, let's not finish this all the way. Let's leave a little bit of opportunity here and exit now versus closing it all the way out?
No,
yeah, I don't think it was.
No. We had planned on raising all the rents, rehabbing everything, and raising all the rents, but just because of how the market is right now, how far we got the rents of the ones we did rehab and turn, it makes sense. And so right now we're actually selling it.
That's
under
great.
contract.
Yeah.
Oh, okay.
Under contract.
Perfect.
It's not sold until it's sold. So
yeah, for sure. And so what will be your game plan? Do you see yourselves exchanging out of that? I know this is a joint venture, so an exchange might be a challenge, but or just using that capital going and do more syndication deals?
Yeah, we're going to take that capital, use it in more syndication deals, or even in a short term, maybe backfill some of our other debt positions in other deals that we do have going on. But yeah, we're going to be, closing it probably January 1st. So tax burden will be next year. Good. And the great thing about syndications too, if you do have a business that does it, is getting those tax benefits as well for your company are very, very lucrative. So
yeah, absolutely. Well, look, guys, I've enjoyed our conversation today. We've sort of run the gamut all over the place, but I really just enjoyed hearing about your story and your journey and how the both of you came together, how you started out with that first duplex and not even investing in your backyard, going out into a different market, which I think set you up for success in the syndication space and getting into the larger commercial multifamily space because you started to think about it from the perspective of how do I do deals outside of my backyard, which is critical as you start to move into that, commercial multifamily space. So congratulations on what you guys have accomplished thus far and for shedding some light on how you guys have structured your business with an emphasis on the capital side of things and how you're attracting investors to your business. I want to start winding down here. I've got just a few final questions for you. The first is, and Ashton, I'll direct this at you. What's the biggest challenge that you faced in your multifamily investing journey that we could all learn from?
Yeah, biggest challenge is probably understanding yourself, knowing yourself, right? Know thyself and be free, I think the term is, but that's the reality. When Chris and I read Traction, we did the disc profile to figure out where we need to be in the business. You kind of you do, your ego says, I can do that. And I've always been that kind of guy. Like, yeah, he can do it. I can do it. Yeah, let's do that. And, which is good to an extent, but the reality is like, that's not where you're going to shine. So know yourself, know what you bring to the table, know what you bring to a partnership. And I'm not just talking about whether you're good at capital raising, underwriting, like what's your personality and how do you talk to other people? Like Chris is very detail oriented. When I bring him a big idea, his immediate response is no, because he wants to know all the steps. And that's good. That's a fair response, but that's not where I shine is all the steps. I have this big plan. Now, how do we get there? And that's why I come to him. So like, know what you're good at. So if I come to him with a big idea, it's going to be no. And I have to know that right off the bat. Right. So, know yourself, I think.
Yeah. Love it. Chris, do you have something to add there? You chuckled. So I wonder if you have something to add.
I actually was going to say no when to say no, but I say no a lot. So I guess get a good team where you balance each other out. But learning to say no to the wrong priorities, the wrong things, I think is very important. Every quarter we choose what we're going to focus on, and we have to say no to a lot of things, which can hurt someone's feelings. It can it can be frustrating at times. But we have found if you focus on too many things, not only in your role but as your goals, you rarely get any of it done. So know what you're focusing on, know what to say no to.
Yeah, love it. Last question I've got for you. What's the biggest win you guys have had on your multifamily investing journey so far?
That's it. Yeah. So the biggest win, people are going to want to hear how much money we made, how much deals we've closed, how many doors we under management. I would say family. I would say family unity. I haven't been closer to Chris and his family. His wife works in the business. My wife works in the business. We both work from home. We took, a vacation as a team, and it was a tax write-off because we did business there, all to Hawaii, and we were there for a week and a half or something. Like, that's a win. That's awesome.
Yeah.
Like, we're doing this for the lifestyle. We're not doing this. Like, yes, money's great and money enables you to do that stuff. And working, being an entrepreneur allows you to do that stuff. But if you're not enjoying it, what's the purpose, right? If you're just burning your tail off the whole time, you're missing out on your kids' lives. Like, I get to go in the middle of the week. Like yesterday, my daughter didn't get to go to school because school was canceled. We went hiking. Like, cool.
Yeah.
That's where you were.
Yeah.
That's where you were when Chris was trying to get a hold of you.
Yeah.
Well, look, that's great advice, Ashton and Chris. I appreciate you guys coming on and sharing your journey with us and giving us some insight into how you've built your business and the success that you've had over the last 3 years. What's the best way for our listeners to connect with you and learn more about what you guys have going on?
Sure. Our website's the best place, valkyriegroup.com, VALKERE group.com. Tons of content on there. I write a blog once a week. We have, tons of ebooks. So check it out.
Yeah, love it. We've got a link to that in the show notes. So go down in the show notes right now, click on that link and connect up with Chris and Ashton. Again, guys, I appreciate you coming on, sharing your journey with us, and I look forward to connecting with you again soon.
Thanks, David.
Thank you so much, David. Appreciate it.